Hey yo, what up guys? What's going on? Just kind of watching Tesla Cruise here. Definitely it's just a name that you don't bet against. I think the title of today's little session here pretty much says it all. Tesla just continues to be as resilient as they come. I saw the headline pretty much before the market closed there. I don't know if anyone caught that, but after having the news from Apple talking about slowing hiring process, we also got Ford talking about slowing hiring process. They're basically cutting about like 8,000 jobs essentially. So that was a headline that came out. So kind of just giving you that macro backdrop in terms of the hiring still, kind of just slowing down and cutting back expenses more so. But one astonishing move out of Tesla, they basically came in line with what expectations were. But the kicker of why I think it actually popped more than I want to say what's actually kind of regressing right now, but we actually got basically what the forward guidance was, and they are still seeing 50% average annual growth in vehicle delivery. So that was pretty much more so the telling story rather than the numbers coming in line. Had they ended up giving us those numbers that came in line and then guided down, I think it likely would have been a different scenario in terms of the price action that we're seeing right now. But because of that forward-looking guidance and still seeing that pretty much that growth potential, that's really why you saw the stock pop as much as it did. It did hit as high as 778 after hours here. So it's kind of a little bit concerning the fact that it's actually still regressing fairly slowly. It was up about almost 5% when it smacked that high in the afternoon here at 778, and it's now up barely 2% right now. So a little bit concerning just in terms of that price action. I I was actually a little bit more flushed in the sense that they didn't maybe pop this out of this wedge as you see on my Tesla screen right now, the chart. I was actually surprised they didn't pop this over that 746 and give us the breakout over that 751 level. More so. So they ended up saving it towards after hours. Now, my concern right now is that I'm hoping we don't see something similar to what Netflix gave us yesterday, where you saw that afternoon pop and then it ends up giving it all back. And what's actually more so concerning to my thought process is that I expect tomorrow more so to be a breather for the overall market. I expect us to be slightly red to pretty much neutral tomorrow, in which we see some regression out of what has been, I want to say, a historic bear market rally so far in, into earnings. And that's where I think that a red market tomorrow may not play into the favor of Tesla pulling what a Netflix did this morning and relatively going red and then just ripping with the overall market. So that was pretty much my concern about that. But I basically came on live yesterday. I kind of gave you guys that heads up. I pretty much emphasized also. I said to pretty much keep an eye out for a dip and rip scenario. That's essentially what we ended up getting this morning. Those of you that heard me yesterday, I came on the live. I pretty much said watch for that dip and rip scenario. You had your dip buy opportunities this morning, and they literally all just went. I know Tom Avery pretty much just called out a lot of names that just kept going. I think Avery at this point at one point was probably in like most of the chip names, not chip names, but most of the tech names that you could pretty much think of that were carrying this market to the upside. Microsoft, Apple were probably the two that I can think of, along with even playing Spy at that sense. So a lot of names just gave you that beautiful rip and dip, and that was exactly what you pretty much wanted to see. All right. Um, Siraj, what about Amazon? I will get to that chart for you in just a second. I believe I still have it marked up. So I'll get to that one for you in just a second. But just keep in mind, don't try to force the situation with Tesla tomorrow because you are going to want to pretty much keep in mind what the macro backdrop looks like tomorrow in terms of how the broader market is standing. So we may not get this kind of green market momentum here going tomorrow. So it may not play in the favor of showing relative weakness now with Tesla and then getting that rip like what we saw with Netflix today. All right. So that's just pretty much something to just keep in mind. As I kind of just get real quick before I get to your Amazon chart, just giving you um, pretty much what I'm looking at for SPY. We basically ended up wicking right into that gap fill that we are pretty much looking at completing here within the next coming days. So we literally wicked right above that. What is this? A 395.78, and you saw that we basically ended up progressing. So let's see if we get that pullback. Otherwise, if you're pretty much looking for the upside, you basically want to claim back over 396 for continuation into the gap fill and continuation of this overall trend. But what I'm favoring is pretty much the downside, in which I have us pretty much regressing down towards 390. 390, below 390, I have us coming down to 389. That 389 to me is more so the spot that I kind of favor in terms of a ideal buy the dip spot and pretty much going out towards next week expiration. I would prefer not to buy this week expiration, especially going starting tomorrow. I would prefer to go next week expiration, because what I fear may end up happening is that we get this red day tomorrow, and then they kind of give us a little bit of a consolidation to I want to say a flat day on Friday before this little bear market rally pretty much resumes going into next week ahead of more tech earnings. So that's kind of just the mindset in which I don't want to get caught in, you know, what, 2 days until the end of the week, and then pretty much theta and premium just getting chopped up as you don't get that expected move in continuation for the overall uptrend. All right. So big sentiment wise, I would just say try to buy next week expiration for anything to the upside that you're favoring for a bigger move to the upside as well. All right. So that's pretty much that in terms of, again, 396, you continue your gap fill to the upside. Otherwise, 390, 389 would be that ideal buy the dip spot going into next week expiration for me. All right. Let me get into your Amazon chart real quick. Amazon was just a monster today. That literally just looked beautiful. You have a nice little wedge set up. If you can see the little gray lines pretty much set up. You had a beautiful breakout once that crossed to over 119 and a half. That was ideally your breakout. I believe someone had asked me not too long ago. I don't know if it was yesterday or the day before. I pretty much came on live and I mentioned that 123 half was roughly my pretty much my PT for the short term. So we ended up getting right around that 123 half. I think we pretty much smacked the high 123.48. So basically your 123 half. Looking for the pullback ideally. If you get pretty much a minor pullback, I'm looking at support here at 120 flat. Otherwise, a steeper pullback would pretty much put us right back into the wedge potentially, and that would pretty much regress right down towards 117. So 120 and 117 are those pretty much those big levels that you're watching for your dip buy entries. Otherwise, if you're looking for continuation here, you're looking to pretty much push this up towards 125.31, and that basically is looking for continuation above today's high. So that's basically the two scenarios that you're looking at. But again, I would caution buying this week expiration, of course, if you're trying to play that upside. I would preferably like to play next week expiration, but I know, granted, the fact they have earnings next week, it may not be ideal in terms of premium wise, how much it may end up costing you. So just something to consider. Maybe a call debit spread into their earnings for next week may possibly be more ideal for you. All right. But 125 half, basically, if you want to say, that's pretty much my upside in which I'm looking at for right now. But I think it would be a more explosive move to the upside if we potentially get this little dip buy opportunity at 119 down towards 117. All right. So that's pretty much the two levels that I'm watching on that. Other than that, kind of just want to glance back. Tesla's holding up pretty well. She's not doing that bad so far. Apple's another one. I know that everyone's pretty much watching Apple. Apple has really just been carrying this. After their news that they had, what was it, the day before yesterday, it really feels like they basically had no slowing of hiring process, no no sense of cutting back on expenses, because this has literally just gone insanely crazy. If you see the highlighter, you basically have made a nice little ascending channel type action. I'm watching support tomorrow at this 150 spot, 150.04. If you want to be precise, that's pretty much the level I'm watching for support. Otherwise, if we fail to hold that 150.04, then I essentially have this coming down towards 145.87 is what I'm watching for, which kind of sets you close enough towards the support of this overall channel, and that will basically kind of stretch this down towards 144 half to probably wick down towards the support of this ascending channel. All right. So that's another one I'm going to continue to watch. My overall PT pretty much continuing this ascending action will be up towards 157 half. That's why I still have this pushing north up to. My only concern is that I think you likely get that push into the 157 off of the earnings next week, if not very close enough to it. And that likely ends up being the top going right into the earnings as well. All right, so but my overall top still stands around that 157.5, and I think that's where we likely get the U-turn back to the downside. So ride the wave right into the earnings. I think dips should be bought. Ideally, I would hope to likely get that 144. If we get 144, I'll probably buy that with both hands. I don't think you get all the way down there. I'll just be honest with you. I think you'll be tough enough to pretty much get past or below 150, and I think that's ideally you'd buy the dip spot and you likely see Apple hold some relative strength even if we're red tomorrow. So that's the name I will continue to pretty much watch. It's literally just been carrying this rally, if you want to say, for the most part. Let's see what other names kind of caught my attention. Boeing is another one. We've seen Boeing pretty much been astonishing. I think yesterday was more so the better day for it, but you had a beautiful, nice little push right into your uptrend resistance. As you see this little top of this channel action we have going on, you pretty much see where you teetered support to resistance, and you smacked right into that resistance at that 159.40 into the uptrend resistance. So I'm gonna watch for a pullback. Support ideally will hold at this 154.73 spot. If you can't hold that and Boeing starts to get a little bit more volatile and a steeper pullback, then I'm gonna watch for 149 to pretty 149 half to ideally hold, and then we could see a little bit of a consolidation before that next upside. In continuation up towards this gap fill that we have that's sitting at 161.25. All right. So I like Boeing a lot here. Ideally, I would hope to pretty much get this right around that 149, maybe wake down to 149 half, and I would love to pretty much pick up Boeing there towards next week expiration, and that'll be a beautiful play. All right. I'm on cost with tight PA. What do you mean exactly cost with tight PA? Kind of be a little more specific than that. Um, but as you kind of respond to that, maybe give me a little bit more of a detail what you're kind of looking for. That's another one. The semis, I've been pretty much talking about the relative strength in the semi names for I want to say a few days already. You've seen how much Nvidia and AMD have pretty much ripped. I don't know, do I actually have this? I don't think I pretty much outlined this one too much. But I basically had your uptrend resistance. You had a nice little descending action. That's pretty much already played out for the most part. But if you're basically looking, I had a nice little uptrend resistance that's played out. You basically broke that resistance once you broke north of 171 half. Let's see if this prior resistance ends up becoming support, and we basically retrace down towards 173. So 173 would ideally be that support level, and then we can continue to see basically see your continuation of upside, in which you potentially look to fill this gap that's sitting at this 180, 180 half, if you want to say, in continuation to the upside. So ideally, the dip by spot tomorrow, if we can get this down, will be 173 half, and that 173 half should take us right back up to 180 to completion of gap fill. All right. What are we watching? View. If you kind of heard a little bit earlier, I was talking about the fact that the weakness is kind of showing itself a little bit earlier on Tesla compared to how the strength was with Netflix yesterday, in which they actually had a pretty darn good earnings compared to what was estimated. They ended up, even though they ended up going red this morning, they ended up rallying with the broader market. So my concern tomorrow is that I'm actually expecting the broader market to be red tomorrow, and the fact that Tesla is still showing more weakness off of the high that it put in at 778 off of their earnings, it kind of tells me that as we continue to pretty much dip here, I don't think that Tesla's going to be able to sustain a rally, even if it ends up going flat to red tomorrow morning. I don't think we see that kind of Netflix move that we saw today, as the market's going to be relatively red tomorrow, and I think we end up pretty much having this be a quote unquote fake breakout, and we see some downside on this. That's pretty much what I anticipate. It's likely that whoever pretty much called puts has puts or calls is likely gonna get IV crushed here tomorrow. I believe the move right now is pretty much abysmal right now. I think right now if the market were to open at what $13 up, you would more than likely end up getting IV crushed right now. It's only about 2% move. I believe the estimated move was somewhere close to 6%. So I don't think this pretty much gets any kind of further upside. I believe, going into the earnings, I even tweeted, I'm like, I believe the upside is more so limited than what the downside would have been had the earnings been bad. But my upside target was 787. If for whatever reason that we can reclaim over 778 that we had, into the after hours, then we could see this push up towards 787, and then another resistance above that is 809, just keeping the levels in mind. Otherwise, 746, we break back under the 746, you're right back in the level that we ended up chopping north and south of today, and that could ultimately end up spelling trouble for us. And once we end up cracking below 730, I think it's pretty much a wrap that you're likely going to break south of this little wedge action. Trendline support is sitting roughly around 709, 710 by morning, and you likely start to see this trend down. And I'm still looking at 780 as basically what has been a little bit of a support and a reversal spot as you kind of look at the pink line down here. That was basically a hard support level you had dating back to May 12th. You had a potential reversal stopped off at that 780 level dating back to May 23rd. You had some more resistance June 13th, same level again. You chopped right around that 780 level, that 680 level between what the better part of the end of June here to beginning of July. So I expect to basically retest 680 here if we cannot show any relative strength going into tomorrow morning before the opening bell. As the market's going to likely end up being red tomorrow, I don't see how Tesla finds the relative strength to give us a bigger push than what it just popped after hours. All right. So that's pretty much what I'm looking at for that. Amman Casas has a base around 516.50 where it broke out hourly trendline resistance. Let me take a look at cost for you then. Let's see what's going on with Costco. I will say it kind of looks like it is basing here. You could make somewhat of a case for a little bit of a wedge action, maybe a pennant, more so to say the better term. So it does look like it has a nice little pennant in the formation here. I would wait to see if you pretty much get that pop. If you can get the pop here, and ideally for continuation and confirmation wise, I would wait for this pop to be over 528 half. You get the pop over 528 half, then I can see this stretching up towards 544 potentially would be the bigger move here that you could potentially stretch towards going into next week if this market rally sustains. But 528 half would be where I would tell you ideally to go long more so. So 520 is that line in the sand for me is if you end up getting that breakout to the upside, and then you can see a bigger continuation out of this up towards even 544, which would be about a $20 move to the upside, which is not necessarily crazy for how much we have already seen Costco move. I think there's a day what just like this, it literally went from 493 up towards 508. So it's not crazy. I know that Costco has literally been, I want to say, a cash cow for the most part. This rally and the movements in Costco have been insanely crazy. But again, the line in the sand, 528 half, I think that's where you look to go long on that. Otherwise, if you see this start to pretty much teeter under 516 half, then you start to pretty much talk about the gap fill below, and that's where you don't want to be caught in unless you're trying to play the bear case. All right, but 524 half, 528 half. That's what I would be looking for breakout continuation on this one. Other than that, I kind of went through quite a few names in which the key ones right now. Netflix. Let's see what Netflix actually has in store for us. That's kind of one that I didn't maybe touch bases on, but that was a hell of a move out of Netflix. I would pretty much watch to see if we retrace. 211 would be the level I'm looking for support. If we can't hold 211 tomorrow, then it's likely we get a bigger retrace. And I'm looking at 205 to be that potential buy the dip spot going into next week, in which we could see some more momentum build on Netflix in the coming days. All right. So that's one I will continue to pretty much keep an eye on, keep on watch for going into next week as well. All right. I'm on UPST. I think that Avery was watching this one if I'm not mistaken. I believe he was. I could be wrong though. I will say you do have a nice little downtrend resistance. You potentially ended up breaking that. So you kind of got a little bit of a retest. This may end up setting up to be a beautiful one going into tomorrow, if I'm not mistaken. So that could be pretty much beautiful. You already got the breakout. Obviously, you see the wick that you left here at this 3120 high, and you ended up retracing to give you that nice little retest. So I would look for continuation on this one. If you get this back over 30 half, 30.66 to be exact, then you can see continuation in which you have this gap fill that is still incomplete. So 30.66 though would be that line in the sand in which I would look for the stronger reversal and continuation of this downtrend break that you should see. But otherwise, if you can't get a move over 30.66, then it's likely hard for this to pretty much get a more explosive move for the continuation of upside to the gap fill completion. And you end up likely going chopping to the side. So just watch for the pretty much the chop on this one. Otherwise, north of 30.66, I think you're good to go, and you should see further continuation. All right. View, will this be the double bottom of the market spy or expecting another drop? I am expecting another drop view. I think that right now, this is what is called pretty much your quote unquote bear market rally. This is basically essentially what you're looking at is a bear market rally. In terms of pretty much upside, I think we can get a little bit north of 404 here. Again, just the fact that it's pretty much earnings seasons right now, I think we need to get a lot of these big cap tech names out of the way right now, as we have pretty much Apple coming up. I can probably point to some other names, Microsoft and all those names that pretty much lead this market more so. We need to get those earnings out of the way, get pretty much all the macro, no, not macro, but individual companies out of the way, see how they pretty much are conditioned in this market if you want to think about it from a sentiment standpoint, and then we should start to feel the pressure yet again. We are already pretty much getting the headlines and pretty much the insight of what's going on with the slowing of hiring process, with Ford cutting back on jobs, pretty much cutting 8,000 jobs. We're getting the backdrop that's pretty much setting for the next leg down. But this bear market rally has been strong. It's likely going to continue to stay strong going into next week. Pretty much is what the hindsight is right now. But beyond next week, I think that's still something that we can touch upon at the end of next week. We'll see where we're likely at come maybe Thursday, Friday at that point. And then we could talk about where the end stage of this bear market rally is in a broader detail. Right now, though, I still think we do have further upside. SPY 400 is likely on the table, that mental number per se. I personally think that we're gonna get a little bit over that 400 mark, whether it be 405, 407, whatever the case may be. I think we can stretch up towards that number. But then after next week, more than likely, it's gonna be a little bit more of a clear picture once we start to get tighter into that range. So I do expect another drop though to answer your question directly. All right. Other than that though, I will probably conclude today's session here. Let's see what Tesla pretty much does by morning. I think it's pretty much regressed quite handily, and goddamn it gave up all of its gains. So from pretty much that after hours high where it basically popped, what was that high again? 778 to going right back to where it was at the market close. It's just disgusting and filthy after the fact that they basically met their earnings estimates. And they also pretty much gave us the fact that they were still seeing what relatively 50% average annual growth. That is disgusting price action to see out of Tesla. And that's why I was pretty much giving you that sense that once this ends up breaking down under 730, I still believe that we are looking at 680 here on deck for Tesla tier tomorrow. And just the fact that I have the market overall being red tomorrow in what's a quote unquote breather for this bear market rally so far, I don't see the relative strength in Tesla that can pretty much sustain upside movement tomorrow, even if it ends up trying to pull what Netflix kind of did today, going red and then just ripping green. So that's pretty much just giving you a little bit again hindsight of what I'm looking at for Tesla. I think we have the downside tomorrow more so, and that should play right into pretty much the market trend that I'm expecting as well. All right. Other than that, though, we'll see what changes by morning. If anything changes, we'll pretty much give you guys the 411 on live tomorrow at open. But other than that,